All right, everyone, here we are with another video with Invest for Tomorrow. And as we jump into everything I'm going to discuss here, we're going to talk about why the S&P 500 index continues going down, but then we have stocks that are going up, and then we got stocks that are going down, like significantly down. So let's go ahead and jump into all of this. And I'm just kind of going to go ahead and touch base on what I've already talked about in my previous videos, and actually what the second half of this video consists of. But I go into more detail about my outlook on everything, and I summarize here what the dip buyers are doing and how the treasuries are steady. And then as I'm making the video, we could see why treasury is continuing to go upwards, and then also that the US went ahead and had solid jobs reports. So stay tuned for all that information towards the end of the video. And we talk about the tweet of the day. If you guys want to know what stocks I'm watching live weekly, you can join me over at the Patreon. The link will be down below in the description. So here we are with the S&P 500 index going downwards. Now we have some tech stocks like Apple falling hard, right? Almost $20 down. Then we have Tesla, almost a total of already $400 down, but really it's closer to $600. So just about $300 down. And then you can go over to some penny stocks and stuff like that, and they're down, several dollars as well, or almost $1, and that's a big jump. That's like 50%, maybe 70%, but 50 plus, right? And then we have Workhorse, which is a very innovative stock, that got hit hard because of the news, and then it's continuing going downwards because it's in the EV sector, and the EV sector as a whole, is feeling it. Look at NIO, just bounced back from 31. And then we also have PLTR, which is innovation and tech, the future. And then we have so many stocks taking a hit. And then we have stocks that are hanging in there and they're not falling as hard. They're just continuing their bull run. If anything, they're gaining strength. That's GE right there. That's one example. Then we have Norwegian Cruise Lines. It took a big hit, right? This actually took a hit, but a lot of investors are loading up in hopes of the reopening. But Norwegian is not the one I really want us to look at. I want to look at, something like Ford. Ford took a small hit, just a few cents, filled down almost $1, popping back up, hanging in there, just continuing its bull run and trajectory that it's been in. Same thing with Bank of America. It's just the financial sector is growing. These are all S&P 500 index companies, by the way. So as it's going down, these are the ones that are going up 1%, 2%, or staying pretty stable. Now, we also have here the one that I'm really impressed by on how fast it's running, and that is AT&T. It's almost like this is one of investors, or especially millionaires and billionaires, safe haven per se, quote unquote, because when the market is kind of turbulent, you jump into AT&T, you hold it for a little bit or for some time, and then you get your dividends. And also, you're in hopes of it going up. It looks like it's ran up a lot, but it's only $1.50, maybe almost $1 and 80, 70 cents at most from those bottoms. But at the end of the day, these stocks are the ones that I'm noticing in the S&P 500 index that are running or holding themselves up. Then we have AMD. This is another one in the tech sector falling, right? Semiconductors and all that stuff, all that fun stuff. Then we got CCIV, big drop after the merger announcement, hanging in there. And if Tesla's down 300, obviously we're going to see some pullback here. This is Tesla's number one rival right now. It used to be NIO. Then we have others that are in the forward outlook of the future, right? NNDM having the capabilities to do 3D printing and all these other fun stuff. Downwards, big sharp downward turn. Also fuel cell, right? This is the future of innovation and energy and clean energy, and pulled down. These are all taking a big hit. Then we go to Marathon Oil, which is oil. this is what we were totally saying, what the heck? This has no value. And last year, barrels were negative $30 or negative $20. It's almost like for every barrel, you were getting paid $20 to take it. Then it started to break even. And then from there on out, this is breaking out. And oil is showing strength. And look at that bull run right there. These are the energy sectors that we've all known for years, and billionaires and millionaires are just piling up on. I'm not sure how institutional investors are reacting to this, but these are all the companies. Look at that. Occidental Petroleum. I mean, all the way down here at $8. It's just been having a bull run. Forget about what the market is going through. These are the stocks that are just saying that to the market and saying, hey, we're focused on our run, when these guys were falling in the last crash. It's very interesting how things play out. So what I'm seeing is reallocation of investments. Look at XPen just falling, right? After running from $18 all the way up to 78 and then dipping and trying to hold itself up, hit 60 and just been falling. Now, do these stocks still have potential? Yeah, in the long run. I mean, they have a long way to go to show revenue, and a lot of investors are just going to what they know. Look at that, semiconductor, and this is Intel. Intel has been holding itself up pretty well, and ignore all this drawing from previous videos and when I started talking about it. And from 55 to 63, falling down to 58 and hanging out at 60. I mean, it's hanging in there. It's hanging in there pretty well. And then we got, all of these here that have to do with technology in the future and innovation just down, getting torn apart. Now, Wells Fargo, again, the financial system, it's just been running up. Very interesting to me. And also Cisco. This is one of those that is not a safe haven, but a lot of investors, especially retail investors that are billionaires and millionaires, they love to own a position in this. And it has a small dividend, but look at that growth from October till now. It hit a high here, yeah, and it kind of corrected. But, I mean, what is that? What's the difference from 49 to 46? $3 per share. That's nothing. Holding in there really strong. Now, if we look up, if AT&T is growing, I can imagine how Verizon is doing. Let's see if Verizon comes up here. Maybe I'm spelling Verizon wrong. V-E-R. Oh, they got it right there, Verizon. It's dipping. Wow, very interesting. And a lot of investors use this on one of those to hedge against, crashes, which is very interesting to me to see it doing like that. Another one I can think of that a lot of investors are probably, hanging on tight to and thinking about is, we got the Home Depot, which dipped hard, and they're taking advantage of that pricing because that's definitely going to come back. And then John Deere, wow, that right there is a big one. Let's see if I can find it up through Deere company right there. This right here, oh my gosh, this has been running since it IPO'd. Worst case scenario was that the IPO started, it ran up to 170, it fell to 130. I don't think it's ever touched 130 except for a little bit below it on the March crash of last year. And from that point forward, I mean, this thing has been running, and this is just taking off. This is taking off. That's one of those. Another one that investors, especially billionaires, love to go to, and Walmart's another good one, but it's right here, waste management. This thing right here, it has its ups and downs and it moves all around, but you zoom out and you look at this from the bigger perspective and it's just running up. I mean, look at that. That's all it's done from the past till now. It had a moment where it dipped back in the 2000, but I don't think this company is going to see anything like that for years, and it's just been running. Now, it's a very slow moving stock, but these are the stocks I think that a lot of multi-billionaires and millionaires are hedging, I guess, against a possible fall in the market, and hopefully a healthy rebound is what they're looking for. So I found that interesting. So the point of this video is, why are certain stocks like Tesla and Apple falling? Well, the whole tech sector, as we were scrolling down, and innovation sector, especially even EVs here like NIO and then back to Tesla, are falling hard is because of the fact that a lot of reallocation of obviously stocks and money and gains are being reallocated from these stocks to others. And I believe that it's going to be a temporary thing, regardless of the crash or the correction that we're in. At some point in the future, these stocks will be the big hype again and will be very interesting, where all that reallocation will come back and flood these sectors again. So that is something to keep in mind. As always, guys, thank you guys so much for watching. Stay tuned to the very end because I have a lot more information about the S&P 500 index and what's been going on. I definitely want you guys to check it out. As always, if you learned something new, hit the subscribe button. Don't forget to click on the bell. Share this with your friends and community. And don't forget to hit the like button to let me know you watch this video. And if you want to know what stocks I'm watching, you can join me over at the Patreon. The link is down below in the description. We're going to cover about the S&P 500 index. We're going to look at an article talking about what made this run go up, how the S&P 500 index and the other indexes are doing, and the 10-year treasury bond. So stay tuned for all this information. So we have a lot to cover here, and we have the S&P 500 index here in front of us. And what I want us to be aware of is the fact that, yeah, today there was a run. We need to see if this run can hold itself up and how quickly is it going to actually eradicate itself. Because when I look at the chart, I look at it this way. What do I see and what is it showing me and what is it that the chart is sending a message to me about? So the first thing is I've been looking at the peaks, and every time we hit these peaks, right, we go ahead and dip harder. Now, a lot of investors say that 10% to maybe almost 15% is a correction. 15 to 20 is starting to get closer to a crash, and 20 and beyond, we certainly have hit the crash territory. Now, one thing I do want us to be aware of is we almost hit 4,000. We hit 3,950. So I would go ahead and just round this up to 4,000, and 10% of 4,000 is 400. We are only around 250 right now. Even though we've been going down and up, down and up, down and up, we're still at 250. So I still see room here if we are in the midst of a correction, right? We need to see. Now, the reason why this ran up, which we see here in our articles, is the fact that dip buyers fuel stock rebound. So that's the first thing. There are people buying the dip, right? Retail investors, institutional investors, and so forth. Now, the second thing I saw was the fact that there was a rise because of the solid jobs report. I've said this in my other video that I posted. I'm really glad to see this because this is showing not just economic growth or anything like that, or possibilities of an economic growth, but our population, right? Our country as a whole. Jobs reports are looking pretty solid or a little bit better than expected. It's not all about the market. It's not all about us making gains. It's also about our country and our people. So that's cool. Then we also have massive fiscal stimulus and vaccination drives. Those are the two other things driving the market right now, which could be the fiscal stimulus could be a temporary run. Vaccination drives could be temporary as well, just for a few weeks or months. So that's something we need to think about as well. And then we have here our 10-year treasury. So when we go to the 5-day, you could see it here is at 1.55. Watch, it's going to spike up. And this is what the article was saying as well. Watch, it only took a few minutes. There you go. There's the jump. So what it was also saying here was, yeah, the dip buyers fuel the stock rebound and treasury stays steady. So when we look at the treasury, right, on the 1 day, it was pretty steady. It was kind of going downwards and hanging out sideways until the last couple hours of the day, which we're going to look at right now. Just pay close attention. There you go. There's the spike. 1.5770 right now. And then we put the 1 month, you know, it's going to spike up higher. So when we look at this, we've been going higher and higher, and this is not going to show its effects yet, probably for the next few days or weeks, or we might see it as early as Monday starting to affect the market if it stays around these levels or actually goes higher. And then the S&P 500 index is going to do what? It's going to actually start to go in the downward direction again. And yes, these jumps here are holding up the market from going in a straight arrow down. But the fact of the matter is that we continue to go in that same direction. And that's what we want to watch for. That's what we need to look for. And that's what we need to be careful about here and not get too excited. Now, if we see some consolidation for a few days or a week, then it's probably something showing strength and saying, hey, this might have been the bottom, and every single dip buyer that fueled up the stock rebound was onto something. But right now, I'd rather be a little bit more hesitant and miss out on catching the dip or catching it rebounding from the dip and just kind of watch and see if it hangs out in the same area before making any decisions. Now, I do want every single investor and viewer to be aware that if you're a first-time investor or a beginning investor, these type of corrections and crash, they tend to happen in the market. I mean, we went through several of them throughout the year last year, back in September, October. We even went through one in June. Now, the thing about these corrections, quote unquote, that are healthy is because of the fact that when these corrections happen, it allows for bull markets to begin or actually start to stir up to go to newer levels. Now, every single investor before the 2020 market crash had to have diamond hands. That's where that saying comes from, or strong willpower to not sell and quickly, get out, unless, you've been investing since way back here, since '08, and you thought you were going to eradicate all your gains, and you took a small hit there, because from '08 to there, that, everyone's investment mostly would have probably multiplied, anywhere from 3 to 5x on the low end, and on the high end, 5 to 10x or more. So that's probably someone that went ahead and got out. But anyone that was investing here in 2018 and felt that correction and then started to ride that bull run, and then here in 2020 panicked, they learned the behavior. It takes a few years to learn the behavior. So anyone that got in after this dip and you're feeling a little bit worried about this dip, this is where you're supposed to learn, and you're also supposed to think about the stocks that you're in. Do you understand them, and do you see yourself holding them more than a month, more than 6 months, and more than a year? It's very important to understand that about the market. You could do speculative plays. You could do penny stocks if you want to. That's not financial advice. I'm not telling you guys to buy, sell, or hold any type of stock. That's an opinion if you want to go ahead and do that. But you need to have a portfolio as well that gives you a foundational ground to understand what your goal is as an investor long term. So these pullbacks, the one we're going through right now, if you feel like it's a big thing, don't worry about it compared to the long run. I mean, look how many times we've been through small corrections or even a crash, right? Like the one we saw in 2020. So any new investor or beginning investor, this is where you're supposed to learn and not run, okay? Because if you ran back in '08, you would have missed this run. If you would have ran back in 2015 in that dip, you would have missed this run. If you ran in 2018, you would have missed the run from 2019 all the way up to 2020. And if you would have ran from 2020, you would have missed the dip from here to 2021. And I will be saying a story in 2022, 2023, 2024. If you ran from the dip in 2021, you would have missed the bull run for all these last several years. So definitely, that's a message to every learning investor, beginning investor, and even experienced investors that are being a little bit hesitant or being discouraged by the market's movement. This is normal behavior. It's part of the market, but this is why you need to know what stocks you're in and which ones give you the conviction to stay. And this is where you're supposed to get the opportunity to go ahead and load up on more shares the more you can. Now, let's talk about the tweet of the day. So the tweet of the day was, what two catalysts so far in the last week have made the stock market reach these lows we have seen? Do you believe the market will have a slight jump tomorrow or continue its trajectory, how you were supposed to go ahead and pronounce it and write it, but I went ahead and put trajectory and the word tragic in front of Tory. So everyone's looking at it as a tragic pullback. This is not so far anywhere near a crash. We're in a correction. And the two catalysts that have happened so far, and thank you for the one person that went ahead and commented how they felt and what they were stating. But the two catalysts that have happened so far is the fact that the treasury bonds, right, the 10-year treasury and all the other ones, they spiked up pretty fast. And then also the date that Jerome Powell came to speak and try to ease things off, and it did the opposite. But today we're seeing the effects. I guess everyone slept on it and they took advantage of the dip and they bought more shares, and the S&P 500 ran up a little bit. But I do want every single investor and viewer to be aware that we need to watch this carefully. We do, and there is room here if we're in the midst of a correction for it to pull back a little bit more. So what do we do now? Well, my best advice is to pay close attention to the market. Start looking for stocks that you want to learn about or you once wanted and invested in, but it was so overpriced and now it's looking like an opportunity. A stock that was probably at $50 and it's at $20. A stock that was at $30 and it's at $20 or $15, and you have a conviction that it could grow. Look into those stocks. Do your research. This is the time to do research and have all the time in the world to not fear of missing out. And that's one of the best things about pullbacks. Now, hopefully we're not in a crash and we're in a correction, but prepare yourselves. Be prepared and aware. As always, guys, thank you guys so much for watching, and let's make some money.